like you said, the single largest expense that a person pays, especially a high income earner, is tax, and how that's an elective sport. And so for 12 of the last 13 years, I paid no taxes, and I've done it legally. It's not loopholes, but it's simply study.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
Hey everyone, welcome back to Money with Mission. Today I have Shannon Robnett with us. Shannon is a developer and construction guy with over 27 years of experience. I'm going to let him get into how he started doing all that and how he's worked with physicians in the past. So pay attention. One of his big things is helping us to decrease our tax burden, which, as I've told you and you've heard a million times on Money with Mission, taxes are our biggest expense and we pay little attention to them. We just let it happen. Welcome to the show, Shannon.
Thank you very much, Felecia. It's a pleasure to be here.
It's good to meet you. Good to see you. Tell us about, I know you've been a developer, and I believe I read that you're a second generation developer. How did you, besides your dad said or mom said you're going to be doing this, how did you continue in that path?
As the oldest child, they said, this is a great line of work. And I said, no, I'm going to go to college. And in 1991, computer information systems was the emerging field. And I went to college and they wanted me to keep coming back. They wanted me to attend classes. They wanted me to turn in my assignments, and I just wasn't really into that. And so I went back and began to build houses. And I found out that very quickly that I didn't really like homeowners. And so I gravitated toward the commercial side of things. And I built police stations and fire stations and city halls and schools and a lot of medical office facilities. And I began to really kind of come into my stride. But I realized that the minute I was done with the building, I was done getting paid. And I was watching my dad at 50 years old retire with cash flow. And I really grew up with, my parents were Robert Kiyosaki's poor dad. And the dinner table conversation was about 1031s and trades and all kinds of things that were being done to avoid the taxes. And so I really became a student of that and really began to see how, like you said, the single largest expense that a person pays, especially a high income earner, is tax, and how that's an elective sport. And so for 12 of the last 13 years, I paid no taxes. And I've done it legally. It's not loopholes, but it's simply study. Tom Wheelwright is probably one of the most profound authors on that because he writes in such a simple way.
Right.
But that's really kind of my background. And then I've just continued to develop. And then the last 5 years, we've only built for ourselves in our own portfolios. And we've had a great time doing it.
So you said tax payments, it's not exactly how your words, but is an elective sport. I don't think that's exactly what you said, elective sport. Now that's, I'm sure, throwing a lot of people off. I have to pay taxes. What do you mean? And then who's this jerk who's not paying any taxes?
Yeah. And I love those questions.
I'm grateful that you said right after this is a tax code. You can follow the tax code and not pay taxes.
Absolutely.
Go into it more about how it's an elective sport.
Well, I mean, let's just take a simple piece of equipment. Right? If I buy a piece of equipment at the end of the year, let's call it a bulldozer, that bulldozer created about 300 jobs. That bulldozer in Idaho gets taxed 6% every year it's in use. That bulldozer burns fuel, requires people to work on it. It continues to employ people. So when you really look at it and you say, well, why did the government allow me to write that off? Because if it wasn't for the write-off, I probably wouldn't have bought it. I used leverage to increase my tax efficiency. And then out of that, I continue to create jobs with it, right? When you start to think about, take a step back and go, what does this do? The government cannot create housing. They can't build housing, right? They're not allowed to. And when they incentivize developers and builders and investors to buy houses, they give them the depreciation as something that incentivizes them to provide something they cannot. And so when you really start to look at it and start to read the way the code is written, there's always a reason behind why they do it. And if you just kind of put the shoe on the other foot and look at it and go, what are they trying to get me to do that I'm not currently doing that this will allow me to do?
Mhm.
Right.
Mhm.
And then a lot of people fall into the category where they go, well, my accountant should tell me.
Right.
Well, most accountants get consulted after the cake is baked. You go in there in February and you go, you got to save me from all these taxes. The other thing about accountants that I found is most of them are very, very logical and they put things in boxes. They're very left brained. The other side of that is if you have someone that's creative that reads the same thing and you spit that back at your accountant will usually say, well, yeah, you can do that. But they never think that for you. You know, I would kind of equate it in your field, probably from being a medical scientist to being a general practitioner, where you're looking at the symptoms and diagnosing it, where the scientist is looking at the sickness and trying to figure out what to do with it. And so you have the different ways that people think and what professions they tend to go into. So most people fail to get a tax strategist
Yes.
that will come up with the ways that you set up your corporations, the way that you pay yourself, the way that you do your things, and then interfaces with your tax person that arranges all the things that this other person, very qualified and has all the credentials to put that stuff together. And that's one thing that I would highly recommend. And I do have a great tax strategist that can help people with that. Highly certified. He's a recovering accountant.
Yeah.
So
that is key, because so many people that I know, so many physicians that I know, we take our things to the accountant in February and expect them to do magic so that you're not having to pay. It's too late. It's
Right.
the year before,
Yep.
and it's an ongoing process. And I learned the hard way that before I make moves with my money, I need to talk to somebody to understand what's the best way to mitigate a tax problem. It's like even from taking money out of a 401k or IRA, I got to do this because I need to do this. How do I make this less painful? And
Correct.
and you're talking to the right people, they will help you. I had
That's
one
correct.
of my colleagues, a woman in a mastermind with me, who started her own business. She's a physician, but started a business, and her accountant just told her, you need to save 30% of your money to pay for taxes. And when she put that out in our group, we're like, we think you need to talk to somebody else about that, because that's the easy thing to do. And that's the easy thing for your accountant to tell you to do. But there's a lot of ways that you could never have to pay taxes because you run a business. Just what you said, you're going to spend money to employ people and give jobs and do the things that the government wants us to do. So that helps us as business owners do that. Now, we have physicians who are working their 6 a.m. to 6 p.m. job, and we're, I'm just going to say 9 to 5, but we know that's not real. And don't have time, or don't think they have time to do a business to get these tax advantages. What other things are there with investing that could help there?
Well, I'm going to put it to you this way. If you're working 6 a.m. to 6 p.m. and your out is when you reach a certain net worth or certain cash value or cash flow, how can you not have an hour or two somewhere in your year to get with a tax strategist to shorten that time by 30%?
Yeah.
So, what I look at is if people will start their thought process with investing with, how do I maximize every dollar I have? Because when you think about the reinvestment period and you think about, I made $100 this year, I only invested 70 of it because I gave 30 to the IRS, versus I invested 100 and I invested another 100 next year. And that first 100 made me 7%. That compounding part is what Warren Buffett calls the eighth wonder of the world.
Mm-hmm.
So when you really look at how you can do that, I think it's very important that you pay attention to that. But there's all kinds of ways. And like you said earlier, Felecia, that people don't pay attention. And it's really, that's what the tax code is. It's a penalty, right? Yeah. It's a penalty for not paying attention, or an incentive for those that do. Mm-hmm. So when you look at that, you can invest in assets. Even if you're in the stock market, there's things that you can do with selling stocks at the end of the year to take losses and things like that really pay dividends by either paying attention or finding an advisor that is ready to pay attention for you. You guys in your business know what you know, and you do referrals to those that know shoulders or,
Yes.
gallbladders or whatever. Taking that approach with your money is also very wise, as long as they're very vetted
Mhm.
and they have the credentials and they get you the results that you're looking for.
Yes. It's either going to be time or it's going to be money. So one way, it's you can decide how you're going to do it. You can spend your time understanding it because you're smart people and you can get it. It is gettable. I don't know how big the tax code is right now, but I think it's pretty big. So it'll take you time to understand it all. Or you could spend the money to give to somebody who's going to help you get that so you can keep doing what you like to do and shorten the time that you have to do it if you want to, or give you other options for things to do with money because you have other streams of income coming in because you saved on your taxes. Now you can invest in this other thing, or now you can do this other thing. It just is a snowball effect when
Absolutely.
you just start with taxes. I really like it a lot. Shannon, we talk about money all the time, but I don't ask very often my guests what money means to them and what their relationship with money is. And I'm going to start today. What is money to you? Let's stop there.
Money is simply a tool. Money is a tool that allows me to buy back my time.
Okay, got it. If you didn't have money, what would you do?
Well, I would use leverage. I would find other people that I could get to help me do what I want to do, that would allow me to get a second and a third of these things that I've never really had a job, right?
Mhm.
And so I always look at a way that, whether it's building a building and employing all these people or hiring these subcontractors, but they do all the work. I just do the planning and the paperwork, right?
Yes.
And so the other thing that I look at is, if I don't have money, I need leverage to be able to get other people to do the work for me, that I can make a small percentage on what they do and then replicate that process.
So I'm hearing you say, if I didn't have the resource of money, I would be resourceful in finding and using leverage, whether the leverage is somebody else with money, some other people with skills, whatever that leverage is, to be able to do the things that I want to do, which would then give me the money, the
That's correct.
resource, which would
Yeah.
then take you, then you keep going further. Now I have a resource, another resource, that my resourcefulness is going to go even further and stretching. It's actually the resourcefulness that I think we lack sometimes, the creativity that it can take to, like, I don't have time to figure out this investing. No, you don't. You probably really don't. It takes a lot of time. It takes some energy. It takes some know-how to really get there. You can be resourceful and look for somebody who does. That's leverage. You can find a tax person to help you get out of taxes. That's leverage. All those things really help get you further along. Us A students that have to be in control have to learn to let that go a little bit so that we can get further along. I really like it a lot. You do a lot of building and you've done all kinds of different things in lots of different states. How do you make that work?
Well, again, it's with the leverage, right? So when I look at that, we just bought a property in Houston. We're going under contract on a couple more. And so instead of owning a property in Houston and one in Dallas and one in San Antonio, I'm going to concentrate my efforts in Houston
Mhm.
so that I narrow where I'm at, but I have multiple assets. So when I move into a market, I want to, over the next foreseeable future, acquire a few assets in that area. One of the other things that we do is, as syndicators, we help aggregate other people's money that don't have the time,
Yep.
that want to come with us, that want to work with professionals. I would not do my own knee surgery with a skill saw. I would have somebody of qualified profession do it. But we do that same thing, where we go acquire an asset, we uptick the management, we raise the rents, we do the things that are necessary, and we provide all of the accounting, we provide the tax advice on the property, we provide the depreciation, we do the K1s, we do all of that, and then just send out distributions. And so we do that kind of stuff, which we use as leverage, but our investors also leverage us
Yeah.
and 30 years of experience to get professional grade results with amateur amounts of time.
Got it. So I know that a lot of my physician friends want to buy properties and take care of them themselves, which I say you can do that, and that's another job. When you say you live in Boise, Idaho, you have properties, you're buying properties in Houston, I'm sure you didn't just say, oh, Houston, Texas is a pretty city, let's buy stuff there. There's probably some steps you took before you went into that city. Is that correct?
Yeah. What we did was I look at and I underwrite a market. Okay. So I looked at number one, I look at landlord friendly. They've got to like landlords, right? I mean,
Mhm.
California is not a market I would invest in. New York's not a market I would invest in. Doesn't matter how good the deal is. Then I start drilling down into what's the growth look like? What's the city dynamic? How do they feel about new businesses? And then I narrow that down, and then I look at the neighborhood, and I really just, drill into that so that I know that I'm not shooting at 30 or 40 or 50 targets. I'm shooting at 6,
Mhm.
right? And so I can then narrow it down and go, I don't like that deal because it's in Baton Rouge. I don't like that deal because it's outside of my market. And then I'm able to look at it, and I can now have a wide range of deals, whether it's industrial, whether it's office, whether it's, multifamily in my market, because I already understand the market, right?
Mhm.
And I look at job growth and creation and all of those kinds of things. And so when I looked at it, I found Houston before I found this deal.
Yes.
And then I leveraged a property management company because I can't be there. I
Yep.
don't want to deal with the tenants, toilets, and trash. And this is the other thing that I tell people. I tell people to take out your tax return, take out your gross income, divide that by the number of hours that you worked, and ask yourself, is property management going to pay you that much an hour? So can you really afford to? I mean, unless it totally decompresses you to go change out a toilet, and I don't know too many people that does, why are you doing it?
Yeah.
Because you think you can do a better job than somebody that does it all the time, every day, day in, day out, that has vendor relations, that all of that stuff. But I know that not everybody sees it that way. But if you just do the math, it makes it a really hard argument to get around, because a physician makes a decent hourly wage that a plumber doesn't quite make.
Yep. It's a control thing, because I just got off the phone with someone like that who says, I have properties in Philadelphia, I live in California, I'm going to manage it. I was thinking, okay. Because I mean, it's all new inside, so there's not going to be any problems. I think that just like you do, it's like I said, I never want to hear from a tenant, never, for
Yeah.
any reason ever.
Yeah.
It's just not worth my time. So 100% agree with you on that one. Figure out what your hourly rate is for what you do, and is being a manager, and whether you go and fix the toilet yourself or you have to call somebody to fix the toilet and then make sure they fix the toilet and make sure the tenant's happy and do all the things around that. It's never going to pay enough.
No,
ever, in my opinion.
And then the other thing you look at too, Felecia, is how many hours did it take you to buy that property? Let's call it 30. How many hours did you give to the property management that you could have put toward buying a second property or a third property or a fourth property that are now making you additional money, right?
Mhm.
And so when you really, and it's one of those illogical things that we as humans choose to do. And I think that's definitely a mindset shift, like not paying taxes, that people think they have to do. But honestly, if you understand investing and you understand how, real assets versus paper in the stock market and things like that, and then you simply understand return on investment, and then you look at time invested, you can really come to some quick conclusions that there isn't a better way than to partner with a professional to do that, whether that's your property manager or syndication or trusted investment advisor, whatever that is.
Okay. So I'm going to go back to, you vet a city, a particular part of a city. So metropolitan statistical area, you decide I'm going to look at this, then you narrow it on down to different parts. Sounds like you're in different types of real estate, from industrial to multifamily. You may do that all in the same city. We didn't say this specifically, but I heard you say that I build a team there. I have a team. I'm not there. We just make sure things are taken care of, and we do what we call the back end stuff, the accounting, the payroll, and all that kind of stuff. So you go from finding where you want to invest, finding where I'm going to have a good team, to then finding a project or finding a deal that looks like it's going to work there. and then you fire off and do the deal, correct? Okay.
And 80% of that is repeatable on the next property as well. So I've got all my research done. I have my team. I've got my people. Now I just need to go acquire another asset.
Right. You've done all that. And then, and you also so part of your leverage is investors, correct? You
Yes.
have investors invest in the project. That's called the syndication. I know you guys know that already. Sorry. And then you keep the money, make the thing work, and then start paying off to the investors. Got it. I hate the word asset class, but I'm going to use it. Asset classes in real estate that are, and we're not tax people, guys. We're not tax attorneys. We're not accountants. So we're just talking the way we know real estate, that are more tax advantaged for high income earners.
Well, I'm sure your audience knows about bonus depreciation. One of the classes that I really like is industrial.
Mhm.
And the downside of industrial is it's less expensive to build, so there's less depreciation in it. However, to your point just a moment ago about how doctors like to be in control of things, industrial is awesome because it's a true triple net lease. And what I mean by that is if the property taxes go up, the tenant pays it. If the insurance goes up, the tenant pays it. So the tenant pays you a rent portion and a triple net portion that covers all of the expenses with the building, the maintenance, the management, all of that stuff. So for a doctor looking at it going, well, now I can actually even bill them for the management because it's a third party provider. It
Mhm.
makes it one more step that makes this fairly bulletproof. The other thing that industrial does is there's usually 3 to 5 to 10-year leases in place with already built-in escalation clauses. So you're going to start out at $10 a foot and it's going to go up 3% a year. So you know that in 5 years, you're making 15% more. The tenant is paying all of your increased insurance costs. They're paying all your increased maintenance costs, all the water bills. So there's really no reason why they ever need to be at that property because they can actually build a tenant to show up, right? So they can now pay somebody else to do it. And that asset class is very, very stable. It also trades at a little bit higher cap rate than, say, apartment complexes. So the cash flow is usually a little bit better.
Mhm.
And it's really fairly resilient in the market because even during 8, 9, and 10, when we saw, 5% repo in the residential market, we didn't see that in the industrial market. So it's really a great asset class for low maintenance, dependable yield, but it does offer a slightly lower tax advantage. One of the other things that we just finished 2 projects in opportunity zones.
Okay.
And opportunity zones help with your capital gains tax. And without boring your audience as to how that works, if they want to get in contact with me, I've got a short video I can send you that really explains it well. But it allows you to not pay capital gains tax when you sell assets. And so we focus on that. But I think that honestly, to answer your question, the tax advantaged asset is the best asset. And so if you can buy something, we did an office building here where we bought the asset December 15th and we did the bonus depreciation on the asset. Then we signed leases the next year and we did all the tenant improvements. We depreciated all those improvements over the term of the leases. So we got accelerated depreciation on those, but we had 2 different depreciation aspects.
Uh-huh.
And so we were really able to look at how do we maximize the taxes in every single asset that then produce the best results.
Perfect. I know you guys might have gotten lost on that, but that's the kind of stuff that you really want to understand in the investment you're going to do. So you need to be speaking with someone who can really make you understand it or help you understand it. Is not difficult, but when you hear it the first time, you're like, what just happened? But it's cool. It really is. The way you're able to depreciate, which is actually income to you, is amazing. Opportunity zones are really good. Shannon, we are Money with Mission and we like social impact investing. And I like to make sure, I want everyone to know that people that make a lot of money do give back. How do you give back? What impact are you looking to leave?
Well, there's 2 ways that I give back because I believe that I'm a more efficient social change provider than the government.
I agree. Yes.
But of course, that's not stating any degree of efficiency. But One of the things that I do is I provide low-income tax housing. The other thing that I do is I have a foundation that helps people afford housing. And the third thing I do is I work with vets and first responders who suffer from PTSD. And so those are my three main focuses of where I give back to my community, because I have a lot of respect for vets. We owe our freedom to them, have an understanding of the plight. My story, I lived in a truck stop for a while, so I understand how the homeless population lives and how people that struggle to make rent live. So for me, those are very close to my heart and things that I really like to give back to and participate in.
I appreciate that. And then you just said you lived in a truck stop for a while. When was that?
Well, when the market crashed in 9, 10, and 11, I literally sold everything I had to start a trucking company. And we were hauling oversized mobile homes to North Dakota from Idaho.
Okay.
And so I was gone all the time. I didn't own a home. I was literally building a business out of the back of a semi. And that allowed me during that time period to recover from the devastation of 08 and 09 and build back into the company that we have today.
I love it. I didn't live out of a truck, but we had some hard times in 2008, 2009
And Felecia, I talked with a lady who's a coach for 7 and 8 figure earners. And I asked her this question. I said, people say that people that get to that 8 figure mark, that 10 figure mark, 9 figure mark, they got lucky. I've had a lot of adversity in my life. I want to ask you this question. And I asked her, I said, do they have more or less adversity than most? And she said, 90% have seen more things and been through more crap than anybody else on the planet. And that's their survivability, their figure it outness that gets them to the place that says, I can do anything, just give me the opportunity.
Yes, 100%. It is those people, as far as I can see, also are the most resilient. You take more risks, you mess up. He's like, okay, that didn't work. Let's move forward. How am I going to change that everything? In medicine, we don't function exactly like that, because when you mess up, something really bad happens to somebody else.
Right.
And we get conservative because I think that's our mindset in that way. But when it comes to investing, guys, it's a different way to think about it. Sometimes you read, you get it. I get it in my head, but that first step out is scary and you got to do it, and you might mess up. Don't throw everything you have into that. Don't throw all your money into it. There you go. Don't throw all your money into that first thing. Mess up, lick your wounds, get back up. Now figure out what happened and move forward.
And, I like to say that every dollar I earned came from a mistake. And it doesn't mean that the mistake paid me, but the lesson I learned from the mistake made me 10 times what the mistake cost me.
Yeah. 100%. And you don't have to make your own mistakes. You can work with someone who's made a whole bunch of them on their own and has come through them. So that's another way to do it. You can do it on your own, and mistakes will definitely cost you money, cost you time, cost emotion, cost all those things. Or you can work with someone who's already made those mistakes and can help you not do the same thing. Right. Shannon, thank you so much. This has been so good. How can people get in touch with you?
The easiest way to get a hold of me is just at shannonrobnett.com. And you go there, you'll see a list of our projects. We have cameras on our job site, so you can see how those are progressing. You can also get to my calendar and my book list, but you can get directly to my calendar, book a 15-minute call. I'd love to talk with you about what your investment strategy is, how I can help you with that, or any tax tips that I might be able to give you along the way. Be happy to do it. Perfect. And Shannon's got an ebook about how to beat the tax. What's it called? Beat the tax man and increase your ROI. Yes, that's right. You can get that at Beat Tax at moneywithmission.com. All this stuff, because I know nobody's sitting there writing right now. You're doing whatever else you're doing. It'll be in the show notes. So go there to find all these things. Connect with Shannon. He's a good guy. Thanks a lot. We'll see you next time.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.